Hey, what's up, guys? Just got done doing an awesome webinar with about 350 business owners just like you, in which I share techniques on how to apply leverage and double, triple, and even quadruple your business. Here's a replay of it. Enjoy. Thank you so much for that awesome introduction, Greg. Much appreciated. Always love speaking to your group. Again, my name is PK Patel, guys. Oh, looks like we've got some stragglers that are just joining the webinar. Welcome, guys. Anyone that just joined, welcome. We've got a broadcast going for our viewers right back there. Welcome. Wow. All right. If you just joined the webinar, guys, type your name and where you're from in the box to the right. Introduce yourselves in the chat box. Greg, if you don't mind, I'm going to continue the introductions, even though some of these folks were late. Make them feel welcome, right? All right, so we've got Debbie from Bellevue, Washington. We got Kenneth from Dearborn, Michigan. Omar from Baltimore, Maryland. We got Jim from Hollywood, Florida. We got Melissa from Richmond, Virginia. We got Bill from San Jose, California. We got Anthony from Cuyahoga Heights, Ohio. All right. Welcome, guys. All right. Like Greg mentioned, my name is PK Patel. I'm with Midwest Corporate Credit, and today I'm going to share some stuff that's going to absolutely blow your mind. All right. I'm going to show you how to double and triple your business by applying leverage. Okay. So here's our agenda, a real quick rundown of what we're going to be discussing. Leverage. Why is it a best business partner that you could possibly have? The psychology of lending and what it takes to gain leverage in your business. How you can double your business by applying leverage. And I'm going to show you some case studies of some of our clients that have been successful using the strategies that we recommend, and some question and answer sessions to make sure that no stone is left unturned and you guys have all the information that you're looking for. All right, so little bit about me. I have a real estate investing background. Okay, when I was 22 years old, I invested in my first property and I flipped my first property. So here's actually a picture of it. Back then I was so green, I didn't even have a digital camera, as you could tell. This is a Google Street View image of that property that I flipped. It was in Crystal Lake, Illinois, and 2006, I was 22 at the time. I had a full-time job. I worked an entry-level job in corporate America in finance, and we did a double close on this property. Long story short, I had a mentor that helped me out. His name was Gavin. He was in Boise, Idaho at the time. He couldn't be there every step of the way, so this property was in foreclosure. We ended up doing a short sale on it. I walked in, and I was more nervous than the guy that was in foreclosure. So, I mean, imagine that. I mean, you guys, if you were there, you'd laugh. You'd probably hear my knees clattering together. That's how nervous I was. It was my first deal. A lot of fear, a lot of anxiety, but in the end, it was worth it because we purchased it for $175,000 from the bank, and we sold it the same day at the same closing table for $215,000. After all the dust settled, we netted about $30,000 in profit. And man, as soon as I got that check, I looked at it in disbelief. I had just made more money doing this deal than I would an entire year working my job. I mean, it was mind-blowing. So I said, you know what, self? There might be something to this entrepreneur thing. So I was hooked. I was sold on it. But eventually what ended up happening is the financial crisis of 2008, the game changed significantly. By that time, I had quit my job to do real estate full-time. And lenders were now not funding the buyers that were buying from us. We couldn't do the double close strategy. So what happened was it required capital and bridge loans in order to get through maybe about 60 to 90 days worth of seasoning period. It's what they called it is they had a title seasoning requirement as one of their underwriting guidelines before they would let that buyer purchase from us and fund his loan. It required capital starting 2008, and we had to get creative because 2008, 2009, and 2010, all the hard money lenders that we knew about had disappeared. They had gone out of business. So what I noticed was a loophole. It was an awesome loophole. I had a bunch of business credit cards that I've accumulated over the years, and I noticed that half of them were showing up on my personal credit report, and the other half weren't. So I looked more into it, and I kind of parsed out a list on what's reporting and what's not, and made it detailed spreadsheets. And what I ended up doing, along with my business partners, is we ended up using the cards that were not reporting on the personal side to fund all of our deals. And we kept going, we kept chugging along. We were still flipping houses, we were still doing deals, and we actually had a group of investors I would meet once a week, and a lot of people are asking what we're doing to fund our deal. So by the third time someone asked us on how we're funding our deals, we actually said to ourselves, like, hey, you know what? There might be an opportunity here. So we started Midwest Corporate Credit in 2011. It's a small business financial consulting company, and even though we have a real estate background, we serve clients in multiple different industries. We've done funding for distribution businesses, doctors, attorneys, I mean, you name it, we've done it. We've had 7,000 clients since 2011. We specialize in revolving credit products, okay? We have raised over $300 million in financing for small business owners since we started. And we were named one of Inc. magazine's fastest growing companies 3 years in a row. So 2015, 2016, and 2017, we experienced staggering growth. It was awesome. We grew at breakneck speed, and the programs that we put into place have helped a lot more people. So this webinar isn't about us. It's just to kind of give you guys a background on how we started and how far we've come since then. We've got an A+ rating with the Better Business Bureau. All right, so that's a little bit about our background, a little bit about Midwest Corporate Credit, a little bit about me. So let's get into our presentation here. All right, so facts. 8 out of 10 businesses fail within the first 18 months. This is according to Bloomberg, okay? And the top reason for the failure is financial problems. If you take a look at this chart, it says, gives you all the different reasons why small businesses fail, and it gives you a nice visual. So if financial reasons and lack of capital is the number one reason why businesses fail, what if we can create a solution for that and make sure all the companies out there that become our clients are well capitalized? That's a good defensive way to look at it. However, what if we went on the offense? We don't just want businesses to survive, guys. We want your businesses to absolutely thrive and dominate, okay? So that's what we're going to talk about. So this is a defensive side. Yeah, it's great. However, we're going to talk about how you can apply leverage and absolutely dominate in the marketplace and have breakneck growth like our company had. And quite frankly, if it weren't for our own program, we were our first customer. If it weren't for our own program, we wouldn't have had that kind of growth to make Inc. magazine's fastest growing companies list. All right. So what is leverage? Leverage is when you borrow capital and reinvest it for a greater return than the interest rate that you're paying. And when you are able to achieve that, your return on investment is what? It's infinite, right? Okay, so if you can achieve infinite return, how much funding would you need and how much would you borrow? $1 million? $1 billion? Think about it. So most people are actually at a disadvantage because of their programming growing up. Don't use credit cards. Don't get into too much debt. You'll end up in bankruptcy. Live below your means. I mean, you guys have heard all this. And basically, most of our parents were either poor or middle class growing up, statistically speaking. I mean, heck, maybe your parents were rich. That's awesome. You could ask them. I don't know why you're on this webinar, but all jokes aside, guys, statistically, 98% of our parents weren't wealthy. So we have this programming, and it's actually cripples us when that kind of thinking is used in business. So obviously there's performing debt and there's non-performing debt. So the kind of debt that has negative connotation is the non-performing type, is where you're paying for it. However, if you're getting a higher return on the borrowed money, how much would you, like I said, how much would you like to borrow? $1 billion. Why not get a higher return on $1 billion or $2 billion? Makes perfect sense, right? Now, I've got 4 pictures here. I've got Jeff Bezos, Warren Buffett, Bill Gates, and Mark Zuckerberg. These are the 4 wealthiest individuals in the United States right now, if not the entire world. So it's obvious that the wealthy see leverage differently. They have a different outlook on debt altogether. Now, these guys wouldn't be where they are if they hadn't applied leverage in their business. Obviously, I know the most about Warren Buffett. He's definitely agree, and he's used a lot of leverage in his business, obviously. And here's another fun fact. 126 out of 400 people listed on the Forbes 400 are either in finance, investment, or real estate, which are industries that apply a high amount of leverage, right? So you're not on the Forbes 400 list, otherwise you wouldn't be on this webinar, right? So now what? Well, what we do is we scale that down and start from the beginning, right? Now, if you think about it, who has more money? You or the bank? Obviously, the bank has more money. So it only makes sense to figure out how to leverage the bank's money. That leads me to my next image here. You got this guy. Who is he? He's the banker, okay? He's intimidating. Look, he's lighting a cigar with a $100 bill. And this is how most people see bankers, is they think that their loan's going to get declined and they're not going to be able to get anywhere. The guy's going to laugh at them. They're going to get rejected. They're going to spin their wheels and they're going to waste a bunch of time. But that's generally because they wear what I call desperation cologne. What is desperation cologne or desperation perfume? Basically, it's when you act desperate and you go to the bank and it's almost like you need this loan, otherwise you're going to not make it and your business is going to go belly up. Well, think about it. Would you lend to yourself if someone like that walked in? If you walked into your own bank and you were desperate, would you lend to yourself? So if not, then why would the bank? The clever way of going about it is to show that you don't need the money at all when you apply for the loan. It's basically not going to make a big difference in your business. The attitude that you want to have is, yes, if I get this loan, Mr. Banker, then my business is going to grow, 10, 15, 20, 30, or 50% by this time next year. If I don't get it, I'm not going to go belly up. In fact, we're doing really well, but we're going to grow at a lower rate. So that's the difference between desperation cologne, needing the loan, as opposed to not needing the loan. And If you don't need the loan, I guarantee you all the bankers within your city are going to line up and they're going to want to lend to you. I know that because I've got clients that are already using some of these techniques. And at the end of the day, the banker, all he wants is his money back with interest. So he doesn't want to bet on you if you're desperate. And when you apply for a loan and it goes into underwriting, what does that particular individual look for? What separates the 10% of the applications that get approved versus the 90% that get rejected? Well, when your file goes into underwriting, this is what they're looking for. I call these the 3 C's of lending: cash flow, collateral, and credit. What we're going to do is we're going to cover credit because it's the most important part. The other two are pretty self-explanatory, but let's go into credit. Now you have 2 types of credit. You have business credit and you have personal credit. And let's talk about business credit. Just like individuals, every business has a profile as well. And just like your personal credit, you're able to do certain activities that will build your business credit faster than had you not done them. The only difference, instead of your social security number, it uses a tax ID number. The credit bureaus are slightly different. If you want to get really technical on the business side, you're going to have about a dozen credit bureaus that are utilized. However, there still are the big 3, just like you have TransUnion, Equifax, and Experian on the personal side. You got the big 3 on the business side, which I'll talk about in a little bit. And just like when you started building your personal credit when you were freshly out of college, you can do the same with business credit. But why is business credit so important? It keeps business debt off your personal credit score, so your FICO isn't affected negatively. The lower your credit score is, the lower your FICO, the higher your rates, fees, and hassles are going to be, the more paperwork the bank's going to want to see. So you want to keep your FICO as high as possible. Your long-term financing can be declined if you fall into a personal debt trap. And I've got a case study which I'm going to share with you a little bit later about this personal debt trap. So you want to also start building your business credit so you become more bankable in the future. And these accounts, typically, when you get a true business credit account, it's going to report to corporate Experian or commercial Equifax. And the case study that I'm going to share with you is right here. I had a client a few months ago. In June of 2018, he came to us. He came to me. I consulted with him. He had started a business and he used $24,864 out of a $25,000 credit limit on a personal credit card to fund his startup expenses. And I advised him to pay this debt down, even though he had used a balance transfer check like this. Now, this isn't his, this is one of mine. I'm just using it as an example, but you guys have all seen these. If you have personal credit cards, you get checks like this. Unfortunately, when you use them, the credit bureaus can't decipher the difference between it being a business debt or a personal debt. So it just looks like you went on a giant shopping spree and maxed out a credit card for $24,800. So you got to be really cognizant of this debt trap. And here's what ended up happening. It dropped his score. I mean, this guy had excellent credit. And unbeknownst to him, it dropped his credit to 704, 698, and 710. This snapshot of his report is from July 27th of 2018. And I advised him to pay all of this debt down. Yes, he had just taken out a balance transfer. He wrote the check to his business. He dropped it in his business bank account. But I told him to pay it all back. And here's why. This is a snapshot of his credit report on September 3rd of 2018. As you can see, the only thing that's changed is his revolving credit has decreased. But take a look at his scores. Here's a side-by-side comparison of his scores. They used to be 704, 698, and 710. Now they're 782, 767, and 791. That's a 76-point increase within a 38-day period. Guys, it's amazing. I mean, this is the difference between A paper and B paper. So what I'm going to do is I'm going to show you how we're getting accounts for clients that only report to the big three credit bureaus on the business side and not the personal side. It's Corporate Experian, Commercial Equifax, and Dun & Bradstreet. That's where the accounts that we set up for our clients are going to report. There are certain things that the banks don't want you to know. Okay, a lot of this information that I'm sharing with you, the banks don't want you to know. They don't want you to know which products report to your personal credit and which ones don't. We kind of had to figure that out ourselves, and you have to do additional due diligence to figure out which banks are commercial banks versus retail and mortgage specialized banks. If you go to a mortgage specialized bank with a business loan request, their underwriting criteria might be a lot stricter than a business focused bank. So you always want to be cognizant of that. We have a massive database of banks. We have over 350 banks, and we know exactly where to take a certain application because we know all of their underwriting guidelines. And the other thing they don't want you to know is how to use the 0% balance transfer check like this one on a perpetual basis. Now, take a look at this image. This is a scan of one of my balance transfer checks. I have a real estate investing company called Standard Holdings, and this is from one of the credit cards that I have. It's got a $100,000 credit limit. I want you to read what it says in the red underline text. It says 0% promotional APR through May of 2020 in exchange for a 1.99% one-time fee. Guys, that's huge. If you do the math on that, if you write this check, by the way, this check could be written to anybody. It could be written to my own company, okay? And that's exactly what I do when I get these balance transfer checks is I take advantage of them because I get to borrow for 18 months at only a 2%. I mean, heck, what is that? 1.5% interest rate. Also, anytime I make a payment, it goes directly to the principal balance. So, what is unsecured business credit? They're lines of credit that are established in your business name with a personal guarantee, but do not report to your personal credit. These are cash lines from banks. They're not vendor cards. We're not talking about Home Depot, Menards, HP, or Dell, or gas cards. These are actual cash lines, guys, that could be used anywhere. They're major Visa, MasterCard type of credit cards and checkbook lines. So I've got about $3.5 million worth of these things, right? I got my business credit cards here, and I got my checkbook lines right here, okay? So the average limit on one of these is about $57,500, and I'll show you exactly how we build that up. All right, who is it for? It's for companies in every single industry, including real estate. It's good for startups, and we've had all sorts of clients, guys. We've had attorneys, doctors, distribution, manufacturing, I mean, you name it, e-commerce, all sorts of clients from all shapes and sizes of businesses. All right, so what are some of the benefits of unsecured business credit? It's unsecured, so there's no collateral required. When you're first getting started, you may not have any kind of a collateral. So this is a great way to get started, guys. Another big benefit is that these are not even going to show up on your personal credit report unless you default on them. So it shields your personal credit. I could max everything that I just showed you. I could max it all out, all $3.5 million, and I will still maintain an 830 credit score. Okay, so huge benefit. These are revolving lines. Every single account that I just showed you, all of these are revolving lines. Okay, so what does that mean? Let's say I borrow the entire $3.5 million that's available right here, and I pay it off. Well, guess what? I have $3.5 million available the very next day to use again. So it's like a yo-yo. You could continuously make acquisitions, sell them, pay it off, and you could make more acquisitions. You could also get credit limit increases, guys. So all of these accounts, they started small when we were new. So they started between a $5,000 and a $15,000 limit. And now, like I said, the average limit on one of these credit cards is $57,500. So over time, you could grow them. And we actually show our clients how to get perpetual 0% balance transfer check when they season these accounts. So think about this, guys. Imagine that you had $500,000 to use at 0%, and all you have to do is pay a 2% balance transfer fee. What can you do with that, and how can you infuse it into your business to get a higher return? That's what I want you guys to grasp from this particular webinar, okay? Is how do you go about doing that, and what difference that would make in your business? What can these lines be used for? Startup or working capital, marketing, general expenses, receivables, inventory, the rehab portion of your fix and flips if you're a real estate investor, to buy materials, pay contractors, even continuing education. All right, let's hear about some success stories, guys. Here's some testimonials from past clients. I got Sean Kempton here, and Sean actually has a manufacturing company based out of Roselle, Illinois, and does about $8 million in revenues. Here's what happened. He actually became a slave to one of his big clients. So this client is so large that it's actually, he gets maybe $1 million or $2 million worth of business from this particular client. It's a Fortune 100 company, huge. So what they did was they threw their weight around, multi-billion-dollar company. They were giving Sean his payments on a net 30 basis. That means on the first of the month, Sean would ship the product out, and on the 31st of the month, they would pay Sean. And all of a sudden, they're like, well, we can't do that anymore. We got to tighten this up, and now we're going to give you net 90 terms. So they changed from net 30 to net 90. Now Sean's got to wait 3 months in order to get his payment, or he's got to drop the account, which it'd be a significant blow to his business. So what I did was I set him up with a $250,000 business line of credit. He's able to float his receivables for 90 days easily and still keep this account. I believe he went out and got another account and came back through another round of funding with us. So very, very powerful, guys. I mean, this could significantly change your business. Here's another one, Rafael Velasco. He had all his money stuck in a property. So he was property rich, but cash poor. He came through our program, got some business credit, and now he owns 4 or 5 properties. So he's able to scale up very, very quickly. Here's another one from Colin McGrath. And I've got another one from Brian Vaughn Cross. He owns Firewatch Solutions. And I actually I I met up with Brian. I went out to California and met up with him. He's a government contractor, and this guy literally doubled his business by going through our program and getting $125,000. Now, instead of just taking on one contract, he's able to take on multiple at the same time and have that working capital in order to pay his subcontractors and purchase materials. So here, check it out.
Getting this line of credit through Midwest has really helped me out as far as being more aggressive about chasing contracts, making better moves. Because before, my growth was kind of slow just because I just not having enough money to support different contracts. Now with line of credit, I can be far more aggressive about expanding my business. Having this line of credit and getting more business will allow me to hire more employees. So I have it more beyond just me doing everything myself. I have 2 or 3 close friends that I've been using part-time. I can use full-time.
There you go.
So by the end of the year, I hope to have 2 or 3 employees, and we just do a lot of travel, a lot of support for these nonprofits overseas.
That is awesome. You're adding jobs, you're helping nonprofits, and you're obviously going to be making money. I mean, and you're your own boss. How cool is that?
It's fun.
What would you say to a potential client that's considering going through our program right now? Let's say they're sitting right here. What would you say to them?
Well, Midwest Corporate Credit has helped me out a lot as far as they know how to navigate the banking industry. They know who to talk to, how to write the forms out, what to ask for the right way, what paperwork's needed to kind of win your argument and win your case. So before going through them, I had a rough time getting credit or lines of credit or loans from anyone. But once I counted on their expertise and their experience, I was able to get 6-figure lines of credit through multiple banks, all of them within my area. So they know their business, they're experts.
Pretty cool, huh? We also have Juan Monzon. He's a client of ours, and he's in Miami, Florida. He's got a tile and marble distributorship, retail and wholesale. So Juan Carlos actually took out some business loans from a secondary market, and they were extremely high interest and extremely high payments, and we're able to set up a business line of credit for him in order to get out of those and be able to use the funding over and over again. Here, check it out. See for yourself. So one of your growing pains was capital. Am I right?
It's for every business. There's no business that doesn't need capital if they really want to grow, if they really want to make it profitable. Capital is very, very, very important. So now with the help of you guys, Midwest, I'm going to be able, to save a lot of money, to raise, bring in some of the products that I'm lacking on, be able to sell to some of the contractors that I'm not doing so, even though I have a few of them in here, maybe 20, 30 of them, but I'm afraid to sell them and not be able to bring in the material because the lack of money. So it was necessary, to really get something like what you guys are offering.
So by the end of the year, we're in June right now, so you still have half the year to go. What percentage do you think you'll be able to grow your business by? Because of what we did?
I would say minimum 15%.
15%?
Minimum.
And when you're dealing with millions of dollars, 15% is a huge number.
It's a lot of money, yes. It could be a lot more. It depends on the market, how the market portrays in the next few months. But it will definitely do that. Plus, you will increase your profitability tremendously. It will allow you to buy better, to buy more, and to buy better at a better pricing. Because you're paying,
at a lower interest.
Now you can pay upfront because you have the cash flow to do so, which you never had before.
What advice would you give to a potential client of Midwest that's considering going through our program but isn't sure?
My God, it's the best thing that can ever happen to anybody that is on this business of getting additional capital. It's a must.
All right, guys. So I'm going to show you a case study of one of my deals. As I mentioned earlier, I have a real estate background. I'm also a real estate investor on a part-time basis nowadays. I do maybe 3 to 4 flips on the side. my full-time profession is a business finance consultant with Midwest Corporate Credit. However, this is something that I do on a part-time / spare time basis. So here's a property in Arlington Heights, Illinois. It was 100% financed using business credit cards, balance transfer checks like the one that I showed you earlier. Here's a before photo, here's an after photo. Here's the living room, dining room area, before and after. Here's the bedroom, before and after. Here's the kitchen, before and after. So here, let's talk numbers. Like I said, it was 100% financed using business credit. I acquired it for $190,000. The rehab cost me $25,000. And holding closing marketing costs were 20 grand. I sold the property for $276,000 and I ended up getting about $41,000 in profit with money that wasn't even mine to begin with. Okay, so what's the return on investment on that particular deal? It's absolutely infinite, guys. Absolutely infinite. I mean, like I said, I wouldn't be where I am without leverage. So how do you do the same? What are the requirements of our program? Well, regardless of what business you're in, you got to have some basics in place. Number one, you have to be incorporated. So whether it's a corporation, LLC, limited partnership, professional corporation, if you're a licensed professional, or a sole prop, which isn't highly recommended, but we could still work with you. You absolutely need to have a separate EIN or TIN. You could get that for free with the IRS. Your personal credit score has to be above 700. Some of the other factors we look for in your credit is we need 10 years of history, minimal inquiries, less than 2 accounts, low credit card debt, and no derogatory, basically no bankruptcies, foreclosures, judgments, or tax liens. All right? Now you're probably wondering what kind of investment is necessary to get started. Well, the answer is none. You don't need any money to get started. What we do is we're actually a consulting company, and what we do is we charge you a true back-end fee. So we charge you 10% of the setup amount. So for example, if you get $100,000, we'll charge you, we'll invoice you $10,000, which is 10%. Here's the kicker though. There's zero risk to you guys. It's a true back-end fee. If we don't get you approved for anything, then we don't charge you anything. And we basically just write off our time that we spent on your file, and there's no fees. There's zero upfront fees, and all of our funding projections are absolutely complimentary. So we're not going to charge you an application fee of $200 or $300 like a lot of companies out there do, and then say, well, you don't qualify. So there's absolutely no obligation after the funding projection. If you don't want to go through our program, you're welcome to walk away. And we've made this thing completely risk-free for our clients so that more people can take advantage of our program. All right, so what I'm going to do is a little bit later, I'm going to go through the application process and actually show you guys how simple and easy it is to work with us. But let's take a quick break, and we're going to take questions now. So I'm going to take a break, but type in any questions that you have in the chat box, and I'll come back in 2 minutes and review all the questions and answer them. All right, guys, we got some questions going. First question here is Kathy from Gainesville, Florida, is asking, will the inquiries damage my credit score? The answer is no. The inquiries are not going to damage your credit. You know what? The best way to answer this is with images. just got done doing a video about this, and let me see if I could find my notes on that particular video that I just did. All right. All right, so here's the first one. Take a look at this pie chart. This is directly from FICO, Fair Isaac Corporation that created the original FICO score. Only 10% of your FICO score is derived from new credit. So what's new credit? Basically, it's new accounts as well as inquiries. So that means inquiries account for even less than 10% of your credit score. And what we do is we actually limit your inquiries to only 5 to 8 per round of funding. And we do that because if you apply too rapidly, you tend to get declined when you go later on. The other thing that you want to consider is when you go through our program, let's say we send an application out to XYZ Bank. XYZ Bank is only going to pull one bureau, okay? They're not going to do what's called a tri-merge, so they're not going to pull your Equifax, Experian, and TransUnion report like they do in the mortgage business. They're only going to pull either Equifax, Experian, or TransUnion. And the great thing is we know exactly where they're going to pull from, and we do our best to stagger those inquiries. So let's say, for example, we do 6 applications. You're going to end up with 2 Equifax inquiries, 2 Experian inquiries, and 2 TransUnion inquiries in a perfect scenario. So that way there's minimal impact to your credit and your credit score because there's minimal inquiries because we've set them up that way to begin with. And ultimately, these inquiries are going to have a diminishing impact as time goes on. Yes, initially there's going to be a spike, and you ideally don't want to apply for anything else after you go through our program. But in about 60 to 90 days, that effect will be diminished. And let me show you some case studies actually with scores. Here's a client that went through our program, and at the top you'll see that initially their credit was 723, 731, and 743, and that was on May 5th of 2018. And then after they went through our program, which was June 2nd of 2018, their credit score was 721, 728, and 742 respectively, and that represents only a 2-point decrease on average. All right, so here's another case study. Here's a client that went through our program and only about 5.5-point decrease beginning to end. Here's another one, same thing, about 5.5-point decrease before and after they went through our program. So as you could see from historic data, inquiries are not that big of a deal. They just sound very scary. So I'm going to move on to the next question now. It is from Jamal from New York. How do I use these cards as cash if they're credit cards? It's a great question, Jamal. We actually send our clients a PDF with multiple strategies that they could use when the cards are new. Keep in mind, the balance transfer check that I showed you guys, you're going to get that, but you're not going to get it for the first 4 or 5 months. They want to see how you service the account before they start sending you out cash access and balance transfer and giving you these awesome deals. So the better you service it, the more opportunities you're going to get to get balance transfer checks like that that give you introductory 0% rate. So the PDF that we send our clients is going to have strategies on how to use it for the first few months until you start getting those. But ultimately, that's the strategy that we bank on, is the balance transfers. We show you what to do in order to get those. All right. As your business grows, you're going to be able to upgrade your account as well. That'll come into play on a long-term basis. So, guys, this here, I want you to understand that this isn't the end game. I mean, these are business credit cards that's necessary to set these up when you get started. Build your business credit, have a few bucks to scale your business, but your end goal is this right here. These go up to about $100,000. That's where they cap off. These are gonna go up to $500,000 to. I've had some that got set up for about $1 million. So that's the difference. Is these are just appetizers. This is your main course, right? So appetizers, main course. All right, let's move on to the next question. It's from Michaela from Austin, Texas. Michaela wants to know, why can't I do this on my own? Great question. You can actually do it on your own. However, I guarantee you the results are going to be drastically different. One thing you got to consider is, do you know which credit bureau a lender is going to pull credit from out of the three? That's number one. We've had 7,000 clients so far, and we've collected over 50,000 data points on inquiries, and we know exactly where every single lender in every single region that's within our database is going to pull from. And our software has come up with an algorithm that maps it where you're going to get the absolute best results for the minimal amount of inquiries. So every geographic region has a different inquiry pattern, and we have them all based on all the clients that we've had. Let's say, for example, you have a late payment with Experian. Would you know which lenders to go to avoid Experian inquiries? We know exactly which lenders are only going to pull from Equifax and TransUnion, which will make it more advantageous for you to go through us rather than to try to do this yourself. And absolutely, you could do it yourself, but think about it. If you had a toothache, you're going to go to a dentist or an orthodontist. You're not going to try to pull your own teeth. I mean, it's madness. So same here. I mean, we're talking about leverage. Why not leverage our expertise and leverage all the data that we've gathered in order to help you get better results? All right. And the other thing you want to consider is which lenders are inquiry sensitive. There are certain lenders that are going to not like competition. So if you have one or two inquiries prior to them and you send that app in second or third position, they're going to decline it immediately. They don't care if you have a 849 credit score. Well, because we all know there's no such thing as 850, right? So they don't care how great your credit is. They just don't like competition. They're going to decline your application right away, just based on the inquiries. And what we could do is we could send your application to that lender first because we are familiar with their underwriting criteria, right? And then let's say you go through this program by yourself without utilizing us. How do you know which lenders are going to report the account to your personal credit and which ones are not? We specifically use lenders that are not going to report these business accounts to your personal credit. So there's multiple advantages of utilizing us as opposed to doing it yourself. So I'm going to move on to the next question. It's from Brad from Winchester, Massachusetts. Say hello to Tom Brady for me and ask him to pick up his game. Sorry if you're a Patriots fan, Brad. Anyways, your question is 10% is too high of a fee? ? I'm not sure if that's a question or a comment, but I'll address it. You're right. It sounds high at first. Keep in mind, though, that the 10% that we charge is only a one-time fee. And you have the opportunity to grow your accounts over time. So let's say we help you get $50,000. You're going to pay us $5,000 one time, but now these accounts are yours to keep and grow forever. So let's say this time next year you grow your accounts to $100,000. You don't owe us anything afterwards. It's up to you to service your accounts the way you want, and it's up to you to get credit limit increases. Now, let's talk a little bit about leverage. What's the return on investment for invested capital that you didn't have access to before? Think about that. So if we get you $100,000 and charge you $10,000, you have 90 grand remaining. Average business, this is according to SBA.gov, nets 20%. So every dollar that they have in sales, they should have 20%. That's an average business. It's 20 cents. Now, first year, you're going to make $18,000 in profit by investing that $90,000 into your business, right? 20%. Then you subtract out the $10,000 that you paid us in fees, and you're still making $8,000 your first year. The following year, you're not paying us any fees, so you're actually making $18,000 year 2 and beyond. And like I said, if you increase it, if you increase your limits, then you're making even more. So you see how applying this kind of staggering leverage could exponentially increase your business. I mean, when you look at it that way, the 10% is no big deal. Now, recently I had a client, and he calls me up and he's like, hey, PK, I need $100,000 right away. I'm like, well, why? He said, one of my competitors on the other side of town is closing shop and going out of business, and he's liquidating all of his material, and I have the chance to buy it at 50 cents on the dollar. But I need the funds by Tuesday. So obviously, regretfully, I was not able to assist him because you just can't set up accounts like this by next Tuesday. So he wasn't able to execute on that deal. I mean, this guy has a coffee roasting business, and he had the opportunity to buy all sorts of equipment that he could have added to his own coffee roasting shop, and he just unfortunately didn't have the money. And the last point I want to make to this 10% fee is, if you use one of your new accounts to finance it, let's say you get $100,000 and you put $10,000 payable to Midwest Corporate Credit, and you swipe one of your new cards at 0%, your monthly payment's only going to be $50. Now think about it. Had this client gone through our program and had the accounts already set up, he could have executed when the opportunity arose to buy out a lot of the equipment that his competitor was going to leave behind. Unfortunately, he didn't play it smart, and I don't know what he ended up doing. In fact, I'm going to give him a call, but it's sad. I mean, that's not a situation that you want to be in. You always want to be in the position of power, and these accounts are going to get you there. So think about it. How expensive is a 10% when you look at it that way, right? Next question. Scott from Winfield, Illinois. Oh, that's right down the street. Scott wants to know, how long does the process take from start to finish? Scott, takes 2 to 4 weeks from start to finish. Simple question. All right. The next question comes from Amy from Cerritos, California. What if my credit is less than 700? Is there anything you can do for me? That actually depends on why your credit is so low. Is it because you have high credit card debts? If you have negatives, there's not a whole lot we could do for you unless you have a business partner with excellent credit. If you have a bunch of credit card debts that's bogging down your credit score, then yeah, there's something that we could do for you. We'll advise you on how to pay it down, kind of show you where you're going to get the highest increase for the amount of payments that you make. Return on payment, basically. All right, next question comes from Quentin from Edison, New Jersey. Quentin wants to know, Why is it better to have a credit card rather than a loan? If you get a loan, you get the money right away. Cash is king. Uh, Quentin, think about it. Is cash king or is cash flow king? Uh, it depends on what you're financing. If you're financing a vehicle or a piece of real estate that you're going to occupy as primary for your business, that's actually a long term. Anytime you have a long term capital need, I would completely agree with you that a loan is better than a line of credit. However, if you get a loan, your payments are going to be much higher. And that's why I asked, what's better, cash or cash flow? Uh, let's just do some quick math here. Let's say you go to Cabbage or Funding Circle, any of these guys on the secondary market, and get yourself a business loan, right? First of all, it's going to require that your business is at least 2 years old. They're going to want to see bank statements and certain financial documents. So it's going to take longer, but that's besides the point. Let's compare apples to apples. Let's say you get a $100,000 loan at 9.5%, and they give you a 5-year term. By the way, those terms and that interest rate is extremely generous. You're not going to see that. The interest that I am budgeting here is on the low end, and the 5-year term is on an extremely, extremely high end, right? So let's just say, for example, you get a loan like that for $100,000. Your monthly payment's going to be $2,100. Now, what happens if you don't get the 5-year term and you only get 4 years? Well, now your payment's $2,512 per month. What if you only get a 3-year term? Your payment's now $3,203. What if you only get a 2-year term, which is actually extremely typical? So at that point, your payment is $4,591. That's a massive payment on a monthly basis, guys. Unless you're doing huge volume, in which case $100,000 may not be enough, and you might have to borrow even more. And if you go through our program, if I borrow $100,000 on any of these, okay, depending on how it's set up, my payment's going to be anywhere from $450 to $550. So what would you rather have? $550 payment or a $4,500 payment? Heck, even the entry level, the $2,100, 4 times as much. And keep in mind, once you pay off the loan, you don't have access to it. It's a closed-end account. Everything that I'm talking about are open-ended accounts. So once you pay them off, you're able to reuse those funds and they're available to you again, right? So there's big advantages to business lines of credit as opposed to business credit cards. All right, next question comes from Cliff from Kansas City, Missouri. You mentioned getting 5 to 8 credit accounts. Why do you do that as opposed to just one big credit account, say for $50,000? Great question. If you're a new business, a lot of times you're not going to be able to get $50,000 right off the bat. You might be able to get between $5,000 and $25,000. So what you want to do is you want to grow the accounts over time. So that being said, think about it. What's better, to leverage yourself out and go wide, which means get 6 to 8 different accounts, plant those seeds, and then have them grow every 6 to 12 months, or just to have one account? Now, what if you accidentally make a late payment to that $50,000 card? You only have one. And the bank decides that they want to close it down or term it out. Now you have no access to capital, right? So that's why we recommend going wide first when you're starting off and getting 5 to 8 credit accounts. The other advantage is you're going to have more trade lines reporting to your business credit profile, as opposed to only having the one $50,000 account. You might have 6 to 8 accounts for $5,000 to $25,000 a piece that are reporting, which is a lot more advantageous down the road when you start going for some of these big accounts, right? So multiple advantages. to what we do. Next question. Mark from Beaverton, Oregon. I'm a startup. I have enough capital in the bank for the foreseeable future. Should I apply for this program now or wait till the need arises? Oh man, that's like asking a barber if you need a haircut. But anyways, all jokes aside, Mark, there's multiple reasons why you want to get started right now and not wait. Instead of cracking jokes and being philosophical, here, let's look at the logic. You have no interest unless you use the accounts, right? That's number one. Number two, you want to start building your business credit right away. You can't go back in time and build business credit. So why not get started immediately? Keep in mind, the best time to plant a tree is 20 years ago. The second best time is right now. So why not get started now, and then when the need arises, you're already set up. Think about my friend with the coffee roasting business. If a need like that arises, you might be well capitalized, but what if you have an unforeseen circumstance where you need capital? Now you're already set up, and you're even more capitalized, right? So the other thing you want to consider is remember the desperation cologne? You don't want to be wearing desperation cologne when the need arises. You want to be proactive and set this up first before you have any kind of a need, right? So looks like I don't have any more questions. We don't have a lot of time anyways, so works out perfect. Here's the application process, guys. Go ahead and type in this link into your browser. Open a new window or a new tab and type in applymidwest.com/1018, which stands for October 2018. Applymidwest.com/1018. Okay? Just the way it appears on your screen. All right? Type that in and open it, and let's go through this together. I'll show you how easy this application process really is. All right, so let me open up a browser here. All right. Okay, so when you get to the page, it looks like this. This is a pre-qual form, very simple. It's going to ask you for your name. Type in your name, your phone number, email address, have you ever filed for bankruptcy? Have you ever been in foreclosure? How much unsecured capital are you seeking? Then it's going to ask you for your legal business name. Type that in. What type of business do you have? Type in your industry. Does your business have any debts or liens? When did you incorporate? If you don't know the exact date, don't worry about it. Just type in the approximate date on when you incorporated. Your gross annual sales, again, if you don't know the exact number, don't worry about it. Put an estimate there. Net business income, if you don't know, put an estimate. And then you're going to come up on this page. It says, would you like to submit your credit report now or later? Go ahead and select now. And it's going to ask you what type of browser you're using. Firefox, Google Chrome, Safari, or Internet Explorer. Pick your respective browser, and what it's going to do is it's going to open up either a video or written instructions on how to pull your credit report. And guys, you're probably wondering why we have you pull the credit report as opposed to us pulling it. Well, there's actually a really, really compelling reason for this. So if we pull your credit, you're going to have a hard inquiry on your credit report. And then if you decide not to move forward with the funding estimate that we give you and you go elsewhere, it's going to hinder you because now you have a hard inquiry. And it would be a tri-merge. So keep in mind, you'll have, if we pulled your credit, you'll have 3 inquiries as opposed to you pulling your own credit, which does not even count as an inquiry, right? It's you pulling your own credit and then providing us a copy of that report will save you from a hard inquiry. So go ahead and follow these instructions and get your credit report, save it as a PDF, and then click on this button that says choose file wherever you saved it and attach it, upload it here, and then go ahead and hit submit. And it'll bring you to this thank you page, and you'll also get an automated email from us. And the automated email is going to ask you to submit your credit check total or your credit report. You just ignore this. That's if you haven't already done it. If you've already done it, don't worry about it. But if you accidentally clicked no and submitted the pre-qual form without a credit report, here's your opportunity. All the videos are going to be attached on the exact instructions on how to pull your credit report. So go ahead and get that done. And once we receive it, within 24 hours, we'll assign it to a professional business finance consultant. And we'll do a consultation and give you a funding estimate. And if you decide to retain us, which I know most of you will, how can you not after hearing this, right? So once we have your full application, we'll go ahead and go to work and get you set up with all of these lines that you could leverage and grow your business. All right, guys, it's been my pleasure. That's all I have for you. Thank you for having me, Greg. Thank you so much. I always love speaking to your group. It's always a pleasure. We'll sit down next time I'm in town. And all right, guys, I'm going to hand it back to Greg. I'm out. Have a wonderful and prosperous week. See ya.